Welcome to US Stock Express. Let's dive into the market action for today, November 21st, 2025. So what's driving the markets today? We're looking at a major split at the Federal Reserve causing chaos, a historic supply squeeze for AI chips, and a flurry of blockbuster moves from key stocks. The big question is, where should you be looking for opportunity in all this volatility? Let's break it all down. All right, let's get straight to the numbers from a surprisingly upbeat session. The S&P 500 kicked things off with a solid 1% gain. Not to be outdone, the tech-heavy NASDAQ 100 climbed a respectable 0.75%. But the real star of the show was the Russell 2000, which absolutely roared ahead with a massive 2.83% jump. And finally, rounding out the rally, the Dow Jones delivered a nearly 1% gain of its own, closing up 0.98%. Now let's talk about the source of a lot of that market chaos. There's a major split happening right at the heart of the Federal Reserve, with top officials publicly clashing over the need for more interest rate cuts. This internal debate is a real tug-of-war, pitting genuine concerns over a weakening job market against the persistent fear of inflation. And speaking of high-stakes battles, we're seeing another one play out in the tech world. While the Fed debates, NVIDIA is grappling with the massive supply shortage of its new Blackwell AI chips. This has left tech giants scrambling and customers facing incredibly long waits, creating a historic squeeze. This AI chip crunch helps explain why Google is going all in on its own infrastructure. In a recent internal meeting, a Google Cloud VP revealed the company feels it must double its AI serving capacity every single 6 months just to keep up with demand. They're calling this build-out the most critical and expensive part of the entire AI competition, a massive undertaking backed by Google's enormous cash flows. Interestingly, the company even acknowledged the market's potential irrationality, hinting at a possible bubble. Shifting gears from tech to healthcare, AbbVie just scored a significant regulatory win. The FDA has approved its bispecific antibody, EPKINLY, for use in a combination therapy for a type of lymphoma. This isn't just another approval, it's the drug's third indication, and it marks the very first FDA approval for a bispecific combination therapy in lymphoma. This could potentially establish a new standard of care and significantly strengthens AbbVie's growing oncology portfolio. Staying in the pharmaceutical space, Merck is also in the spotlight with a pair of positive developments. First, the company announced strong late-stage trial results for its new 2-drug HIV combo, showing it's just as effective as a leading competitor's 3-drug regimen. In a separate win, Merck secured European approval for a subcutaneous version of its blockbuster drug, Keytruda. This new version can be administered in just 1 minute instead of 30, which could be a major boost for patient convenience and adoption. Now let's move from pharmaceuticals to a retail victory. ROST stores proved that bargain hunting is big business, surging to an all-time high. The off-price retailer smashed earnings estimates and raised its full-year outlook, a clear sign that value-conscious shoppers are continuing to flock to its stores for deals. Another stock making a big move was Align Technology. Shares for the maker of Invisalign clear aligners jumped over 7%. This pop appears to be fueled by a powerful 1-2 punch, strong quarterly earnings that beat analyst estimates, plus a strategic new stock buyback program that signals the company's own confidence in its future value. And the rally continues in the construction sector. Building materials giant Builders FirstSource saw its stock shoot up over 7% in a single day. That's a massive move, suggesting investors are making a big bet on a booming construction market, likely anticipating some very sturdy quarterly results ahead. Over in the entertainment world, Caesars Entertainment is flashing a potentially positive signal. According to the Zacks Earnings ESP tool, Caesars is showing a massive expected surprise prediction of over 33%. This suggests it has a very strong chance to beat analyst estimates when it reports earnings in February. This positive preview could very well be the reason behind the stock's recent 7.1% surge. Speaking of surges, let's talk about D.R. Horton. The homebuilder's stock shot up nearly 7%. The catalyst? Comments from a Fed official that dramatically increased the odds of an interest rate cut next month. That's a move that could significantly boost home affordability and in turn supercharge demand for new houses from builders like D.R. Horton. Finally, let's look at Old Dominion Freight Line. The stock delivered a robust 6.3% rally, and it seems to be fueled by a wave of confidence from the smart money. Major institutional investors have been actively increasing their stakes in this freight carrier, a clear signal of their strong belief in its long-term value and prospects. That wraps up today's market update. Thank you for watching. Stay informed and we'll see you next time for more market insights.